Good day, everyone. I hope you had a great weekend. Lots to get to today, so let's get started. The morning started off with some fundamentals. The first announcement was related to the U.S. manufacturing activity, which grew in June behind a pickup in new orders and stronger production. The increase suggests factories could help the economy in the second half of this year. The Institute of Supply Management said its index of factory activity increased to 50.9 in June, up from 49 in the previous month. May's reading was the lowest in 4 years. A reading above 50 suggests growth, while those readings below 50 indicate contraction. The only negative news was factories cut jobs last month. Manufacturing was slowed this year after providing crucial support to the economy for the first 3 years after recession ended in June of 2009. Europe has weighted heavily on U.S. exports, and businesses cut back on their investments in machinery and equipment in the first quarter of this year. The second piece of news was related to construction spending. A report from the Commerce Department indicated that construction spending in May rose 0.5% during the month and hit an annual rate of $874.9 billion, which is the highest level that figure has been in almost 4 years. A big rise in housing helped push the rate higher in May, which would mean that a lot of new homes were started in the month. So keep your eyes on that sector and KB Home stock as well. Technically, the stock market opened higher and kept the momentum going for the first 2 hours of the trading day. However, as soon as the market hit the 1628 to 1630 area that I've been talking about for the last several days, the market pulled back and continued moving lower for the remainder of the trading day. You have to keep in mind that volatility has been extremely high for the last several trading sessions, and volatility works both ways. This is why I'm hesitant to initiate positions right now to the upside, because what looks like a runaway rally could be a simple retracement or a correction to the upside from a strong down day. The market has a way of sucking people into believing that it's changing direction when it's simply exhibiting volatility, and this is why I look at the big picture on a daily basis. So far, this rally doesn't look like anything meaningful is happening, and I'm still bearish for the intermediate term time frame. Also keep in mind a large percentage of professional traders who trade very large positions are on vacation this week, and this is evident by the lighter than average volume we're seeing this week. Therefore, I wouldn't put too much weight into this rally. Looking at the daily chart of the S&P 500 index, the market looks like it's hitting a short-term resistance area and bouncing off that area as well. If the market does go higher, I believe it won't go much past the 1650 level, and I'm skeptical we will get there after Bernanke told the country that we're going to begin curbing the bond buying program. Looking at the gold market, I gave several warnings last week that this market is due for a correction, and we're seeing it right now. I don't believe the pullback will have too much more momentum, but I definitely see the market going to the 1300 level based on the current technical pattern. I do believe gold will be in the triple digits as soon as there is confirmation of major improvement in the economy, and we're not there just yet. I will be reinitiating my short position a bit above the 1300 level and will notify you when that occurs. The bond market hit oversold levels during the early part of last week when it hit the 125 level and has been recovering from those levels since. I don't believe the bounce in bonds futures will be as strong as the bounce we saw in gold, but I'm not expecting anything too significant this week either. The RSI is not nearly as oversold as it was last week, and I believe we will see some rapid cycling or range-bound trading in this market, at least during the week's trading session. Looking at our 3 short positions, even with the rally today, the stocks are not rallying and sticking to downside distribution. All three stocks are either down or flat for the day. This is demonstrating weak relative strength in comparison with today's trading action. Finally, the US dollar is beginning to soften up a bit. The market had a very strong momentum during the last several trading sessions. I'm anticipating a reasonable correction in this market and won't be surprised to see a move down between the 82 and 81.5 level in the next few weeks. Looking at a new position for the day, there's a new short sell trigger on Vanguard Energy ETF, symbol VPU, that's setting up for tomorrow morning. The reason why I like this short is because utility companies are beginning to come down nicely, and utilities are typically the first sector to weaken in a downtrend. I recommend placing a sell stop at the 80.75 level and placing a buy stop, if filled, at the 82.70 level. I'm not taking too many positions right now because, well, you can see how inconsistent the market is behaving at this time. Remember, not taking a position is taking a position. This is something I learned many years ago from a very successful trader. Thanks and have a great night, everyone.